Welcome back to Trading with CJ. Today we have a brand new penny stock on the channel. I've never spoken about this company before, but right now I think it's trading at very good prices. And this is a green, clean energy penny stock. If you appreciate all these videos, please go ahead and smash the like and subscribe to my channel as well. We have a free Discord, and if you want to come and join us on the Patreon, I post exclusive videos, live streams, and access to my buys and sells. And I've been mentioning this one on the Patreon for some time now that I wanted to cover this particular penny stock. So here we are, we've finally got around to it. Please remember, I'm not a financial advisor, so if you are planning on investing, you should always do your own research first. Let's get into it. We have today Dennison Mines, ticker symbol DNN. Now this is a Canadian company, but it does trade on the New York Stock Exchange. So let's go into what this company does, a little bit about them. They are a uranium exploration company based in Canada. They have a few different projects underway and a large percentage stakes in some of those projects, which we'll get into in just a moment. They are engaged in mine decommissioning and environmental services through its closed mine groups. Also the manager of a uranium participation company, which also trades, this is on the TSX under ticker symbol U, and it invests in uranium oxide in concentrate. So they have a few different key assets today, okay, and this is their main one here, the flagship Wheeler River project, and at the moment they have 90% interest in this, okay. The selection of ISR mining method for Phoenix with on-site processing at Wheeler River. We'll go into this in just a moment, but they also have 22.5% in McLean Lake Mill, a diverse portfolio of over 27,000 hectares there in this particular properties, and cash flow from UPC and closed mines ops management service agreements with UPC. So that's their main interest that this company currently has. And Dennison's exploration and development portfolio consists of numerous projects covering over 280,000 hectares there, insane amounts. This is the world's largest and highest grade uranium mining and milling operations. That's the basin where they work, okay, and it's like Lake Uranium Mines as well as Key Lake and McLean Lake, which they also have stakes in. And you can see the overall area of the basin and the parts that Dennison owns, and that's 100% Dennison, okay, those green ones. So there's quite a lot there. Now I know what you're thinking, is this clean energy? This is mining. This is not oil and gas mining, okay, this is uranium and nuclear. Nuclear is reliable. Nuclear plants are the most effective source of electricity. They operate 24/7 at more than 92% average capacity, which is a measure of how much electricity plant could generate versus how much it actually did. That is pretty incredible there. So nuclear right here, reliable, it's clean, it protects our air quality by generating electricity without harmful pollutants like carbon dioxide, nitrous oxide, sulfur dioxide, particularly matter or mercury. So this is clean energy right now, okay, and it's powerful, okay. It can power up to 755,000 homes without emitting any greenhouse gas. That's more than enough to power a city of Philadelphia. That's pretty insane. So nuclear is definitely doing big things for us, okay. And in the USA, 99 reactors is 20% of the USA's electricity and over 56% of the clean energy. So this is definitely a growing sector. It's definitely a needed sector. We're trying to move in that reducing carbon emissions way. So nuclear is a great way to go. And Dennison right now is in this sector. What I would say right now is the supply is quite low compared to the demand which is currently needed for this company. I want to show you this. This is the uncovered demand and the covered demand. You can see it's pretty much half from 2025 all the way for 2035. That's a big chunk there of uncovered demand. And the demand story is positive and improving, and the requirements now exceed pre-Fukushima levels. Okay, and the response to COVID has put additional pressure on supply. Further curtailments have accelerated drawn down of secondary supplies. So right now there is a definitely a needed supply of this, okay, and that's why Dennison right now has been popping off as well, which we're probably going to see a lot more of over the coming months and years. Here is a breakdown of those key assets that we already spoke about. 90% in the Wheeler project, which is development stage project and the largest undeveloped uranium project in the infrastructure rich eastern basin. So there's big things going on here, and 22.5 in McLean, 66.9 here in Waterbury Lake, additional leverage to the uranium price, and it is well funded, you can see, plus internal sources of cash flow from Uranium Participation Corp, which, as we mentioned at the start, is another company that Dennison manage right there. And now let's look at their financials, okay. I'm going to put this up on the full screen right here. You can see the revenues are actually slightly down at the end of 2020, which we're not surprised about, okay. They say this is due to COVID, the pandemic, etc. 14,400 compared to 15,500 and 15,500 the year before. However, if we look at everything else, pretty much going in the right direction. Exploration and evaluation expenses are down considerably, almost half, kind of, 9 compared to 15 there. Operating expenses also down 10 compared to 14. Net loss, okay, it's also making a net loss this company at the moment. However, that's considerably dropped, okay, from 30,000 to 18 down to 16. And then the cash the cash you can see has gone up considerably as of the previous year of 8 now to 24,000, and so has the working capital as well. The numbers are going in the right direction. This is the end of 2020 full year results. Now I want to say this company is constantly putting out good news. Okay, I'm not going to go through all of this, but you can see some of this right here. They've delivered approximately 5.5 million in connection with UPC management services, another 2.5 as part of a project finance initiative, 86.3 in financing and support, strategic acquisition. Lots of good things coming out for this company, and that is just over the last couple of months, okay? However, this was one of the main things here in mid-March. Dennison announces inclusion in the S&P/TSX Composite Index. This is the big Canadian index, okay? Kind of like being in the S&P 500, but you can see it's maintained by the S&P Dow, a division of the S&P Global. And it's basically a Canadian equity market. So that was a big addition for this company for sure, to get listed into that S&P. Now they also had this news which just came out a couple of days ago. Dennison delivers an offer to acquire 100% ownership in JCU, which is an exploration company in Canada. This is big, okay? They're going to pay 40.5 million Canadian dollars, and the assumption of JCU's existing liabilities. And the cash payments will include 10 million refundable deposit on a signing definitive agreement. So we have all of this to be excited by. If the offer is accepted, Dennison understands the transaction will be subject to approval. So this is just an offer to be placed, okay? But you know, they may come back and make a counter offer for sure. But that's another big addition for this company, JCU Exploration Company. I want to point back to this article here, which actually touched on the financials. Now the financials are good. However, this is a company losing money at this moment in time. So I want to touch on this article, which is slightly more of a bearish report, but nevertheless more of a realistic one right now. They reported revenues of 14.4 million, which we spoke about in 2020, losing 16 million. They anticipate an even greater expenditure this year with an estimated cash outflow of 27 million. And as of December, they held 24 million in cash. So that would assume that they are going to make a loss right there from the cash to what they're going to be losing. And after the Q1 expenses, their total cash and investments could be 15 million or 145 Canadian dollars. It says this should prove to be adequate for the foreseeable future, although capital requirements to make Wheeler River operational will still be well and truly beyond their current cash position. So right now they're in an adequate cash position, but they're going to need to raise funds, maybe in form of share offerings, etc. down the line, because they're going to need to pay for this project. It's not profitable at the moment, and I don't expect it to be profitable for some amount of time. That doesn't mean the share price won't continue going up, okay? Lots of these companies in this sector right now, we speak a lot about Gevo and OPTT, all these other clean energy stocks that we speak about, a lot of them are not profitable right now, okay? It's something to come in the future. So just worth bearing in mind that they probably will need to do some sort of capital raising. However, analysts do really like this company, DNN, and you can see right here that has 3 analysts covering this one, and the consensus points are rating to a buy. The target price rates between $1.42 and 71, with the average closing price now being 108. So 108 is their average price, and if we jump into the DNN stock, slightly higher than the average, okay, but it's still considered a buy rating at this range. And we look at the last month on this one, we're actually pretty much break even on the month, which is not too bad. But the 6 months graph, the highest point we got to was actually about 151. So considering we've seen a lot of the penny stock market selling off, we're not that far from those highs. We're only down about 20%. Now I know you think 20% might sound a lot, but from mid-February to mid-May, we're down 20%, compared to a lot of other stocks in the sector, which are down, 50+% right now. Dennison are holding our own. So I definitely think this is a great company for the future. It's in a clean energy play. So in the uranium markets, we've covered wave energy, we've covered biofuel, you name it. We've covered all sorts of energy. Never covered uranium or nuclear energy before. But I want to touch on this article which came out not too long ago. Climate leaders need nuclear energy to achieve net zero. World leaders met on April 22nd and 23rd under President Biden to galvanize efforts to reduce greenhouse gas emissions. And we have less than 30 years to cut carbon emissions from every sector of our global economy to zero. To meet the urgency and magnitude of this challenge, we must take a realistic science-based approach that addresses all sectors. And nuclear power must be one of those technologies. So Dennison is in a market which is definitely changing going forward. They were looking to cut the carbon emissions, and Dennison right now is in a well-positioned place to be able to take advantage of this, to see their revenues growing and the share price growing and investors making lots of money. That's why today I do think Dennison is a good stock. Do I currently hold them? Yes, I have not added to Dennison for some time, okay, but I will be averaging away here and there in the coming weeks and months. But yeah, I do currently own Dennison, but like I say, I'm not a financial advisor. It's just my personal opinion on this company. If you are planning on investing, you should always do your own research first. Let me know your thoughts on Dennison. Have you heard of this one before? Where do you think this would go in the coming months? And is this a company you're interested in? Maybe you add it to your watch list. I don't know. Let me know down below. And if you appreciate this video, please go ahead and smash the like and subscribe to my channel as well. We've got a lot more penny stocks coming up for you on this channel, as well as some growth and some more green stocks as well for those of you that love the green stocks out there. Thanks for watching, and until next time.